3, 2, 1. Hey everyone, thanks so much for joining us. We really appreciate you taking some time out of your evening to hear about how you may qualify as a first-time home buyer. Being a homeowner is a prestigious thing, and we appreciate you being on. It is the fastest path to generational wealth. We have some of our top people on our Zoom call. And again, we appreciate you being on. Just to give you a little bit of background, we'll do a quick introduction for everybody that's on the call. My name is Sam Wax, and I'm born and raised in Florida, moved to the Tampa Bay area in '99. I live in Lutz with my 4 boys and my wife, and proud to be a Tampa resident and homeowner. Eric?
Yeah, how you doing, everybody? My name is Eric Yoder. I'm a mortgage loan originator here with My Easy Mortgage. I've been in the business a couple of years now, and last year I helped 109 families find their home. I really enjoy it. It's a great process, and we're glad to have you here.
Hey guys, thanks for everybody coming out. My name is Kyle Miller. I am a mortgage loan originator with My Easy Mortgage. I am a dying breed. I am a true Floridian, born and raised here. Me and my family, we've owned several restaurants in the area. I've been in this industry since '06, and last year I helped 89 new families find their forever home.
Hey guys, thanks for being here. My name is Ryan Smith. I'm a mortgage loan originator with My Easy Mortgage. Previously in the medical field, spent a lot of time helping people in different areas of their life, and look forward to helping you find your house and moving on that. Next.
Chuck, you're up.
Hey everybody, good evening. My name is Charles Roundtree. I'm the founder and the broker of Insta Real Estate Solutions here in Tampa Bay, and we're a proud partner of My Easy Mortgage, and look forward to sharing with you some insights and general tips that are going to help you along your path to becoming a homeowner. So we're looking forward to engaging with you and to sharing with you the things that we are going to discuss this evening.
Kyle, why don't you go ahead and get us started?
All right, guys, fantastic. So as a first-time home buyer, you're going to feel a lot of things during this process. These are totally normal. So concerned. You're definitely going to be concerned that you're making the right choice, buying the right house, etc. One good thing about getting the knowledge that you need for buying a home, especially your first home, is that it's going to help to relax that concern. So you guys are taking the right step by getting your education in what it is that you need to do. Stress. So we live in a world of high stress. Buying a home is probably the most important financial decision that most people are going to make. So it is a very stressful situation. The good news is just rely on us to help guide you. And that way you can get the most information, that way to make the best decision for you and your family. Intimidation. It's a very intimidating thing. This is, you're most likely purchasing something that's the most expensive thing you probably have ever purchased in your financial history. So it is intimidating, but just rely on your team around you and you'll get through this. Anxious. So there's going to be a lot of anxious feelings going on, making sure that you're making those right choices. It's very normal. And then uncertainty. So as far as being uncertainty in this market, the one thing that you need to remember is that goes both ways, whether you're a homeowner or not a homeowner. So the uncertainty if you're making the right choice, buying in the right location could be an uncertainty for you. But the other uncertainty is if you're currently not a homeowner and you're renting, then I'm assuming that most of you are seeing what's happening in rent in the last year or two. It's going up and there's no way around that. Next slide, Cam. What are the steps to home ownership? All right, number one, so come to this class to learn everything. So this is your starting point. So this class is going to help to give you the knowledge and the education that you need to know what it is that you're going to need to be able to do and what's expected of you in order to get your first home. Number two, your pre-approval with your mortgage broker. So inside of our chat box, you're going to see a link that you can click on at any point that will let you book an appointment with us, pick the date and the time, and that way we can start the pre-approval process. A lot of what you're going to see today is going to be the explanation of that process and more information of what that details. And number three, house hunt with your realtor. So this is the fun part. Once you get your pre-approval done, you've had your meeting with your realtor that they're able to get an idea of your wants, your needs. They're able to start your search and to start to find your forever home or even just your first home. Offers and negotiate. So your realtor is your direct link to the seller of the property that you're hoping to buy. So any offers that you're going to put in are going to be through your realtor. They are going to take the time to tell you what's going on in that specific market of that area that you're looking into, and they're able to give you the advice and the data in order that you can make the best decision. Home inspection and condo reviews. So just like anything else, if you were buying a used car, you would probably want a Carfax report. So that way you knew exactly what accidents that car has been into. So with your home inspection report, it's very similar. So they're going to go in there and they're going to inspect this home up and down and point out every little thing that they can find that's wrong with it. What that does is that gives you two things. It gives you knowledge in the market to where if you need to ask the seller to make those repairs, you know what they are. And it also gives you the knowledge in knowing that you're buying a home that is sound and that you're not going to have to worry about any issues in the future. Finalizing financing. So that's our department. So that's where we're going to come in. We're going to build an application. Basically, we're telling the underwriter we're telling them your story. You know, it may not start out as once upon a time, but we're telling them, you know, everything about you from your job history, your payment history through your credit, etc. At that point, that's when the underwriters are going to go through. They're going to verify all the information that we put on your application, and that's how they approve you for your loan. Next step would be signing at the title company. So once you start your loan process, you're going to get many disclosures sent from you from the lender through email. We are in the technology era where you can click a button and e-sign your signatures, which makes things significantly easier than the way they were in the past. And then once your file is clear to close, you're going to meet at the title company and you're going to go through all those same disclosures, the application, and all of the final paperwork for one last time. And this is the time that it truly matters. This is where you're going to sit in front of a notary. They're going to make sure that all the I's are dotted, the T's are crossed, that all the pennies made it into the right spot. Then from that point, they will be able to close on your transaction. And that's when you get the keys to your new home. And then the last step is simple. It's just to move in. And I prefer it more if you don't ask me to help you to do that. Next slide. All right. Skipping a first-time home buyer consultation. This is the first mistake that a first-time home buyer will make. There is no one-size-fits-all options. So just like everything else in this world, nothing is certain and nothing is going to be the absolute answer for everything. So the most important thing with using a mortgage broker is that we get to see the whole picture of your story, and we're able to put you into the best loan program that fits your needs. Although there are some incentives for first-time home buyers, everyone's need is specific to their financial situation. So there are lots of first-time home buyer down payment assistance programs out there that are either done through the county And then there's some that are even done through the lenders. There are some restrictions on it and some qualifying factors. So this may not fit everybody's needs, but that's where we come in to let you know exactly, what situation is going to be best for you. All right. Next is setting up a budget. Sorry, my computer froze up here 1 second.
Before you go out and take a look at a property, making sure that you sit down and going through with somebody who does this for a living, going through and figure out not just what you can afford or what you can qualify for, but also what can you afford. So having that difference is such a, knowing what you can budget in. If you say, you know what, I don't want, my current rent payment is $1,500 or $2,000 a month. How do we keep your mortgage payment in that same line? Or if you say, you know what, I just got a raise and I'm ready to take it to another level, how much of a house will that new payment bring me to? Hello, Danielle. So I'll take over for Kyle for right now while he's getting his computer rebooted. So there's different types of mortgages that are out there. You've got your conventional FHA, USDA, and also VA. And the one that we didn't list is there are products out there that if you don't fit into one of these programs, there are products out there that we can help you get into. So let's say that you can't verify your income through traditional means, through tax returns or through things like that. Worst case scenario, there are products out there where we can help you get approved through those additional products. Let's see. So Cam, go ahead to the next slide. All right. Benefits of FHA loans. So let's go over FHA loans to start off with. So there's the misnomer is that it's a one size fits all for first-time homebuyer programs. There's tons of first-time homebuyer programs that are out there. If you haven't owned a house in the last 3 years, technically you're a first-time homebuyer. But go back. There we go. FHA loans. So FHA loans, low down payment, 3.5% with a 580 credit score. Not bad at all. We can do FHA loans with a credit score as low as a 550 with 10% down if you've got some other things going on. We understand that through COVID and through other issues, things came up. Not everybody has perfect credit. Some people lost their jobs, some people lost their houses. There are programs that are out there where you could still get back into home ownership, even if bad things may have happened in your past. One of the beautiful things about an FHA loan is the guidelines are a little bit less restrictive than your normal conventional loan. Your conventional loan is the kind that like your mom and dad got 20 or 30 years ago, where they put 20% down, they've got perfect credit, that kind of scenario. FHA is not a bad loan at all. If you think of it this way, it's a 1A and then a 1B. You've got options. You could do a 15 or a 30-year fix. It's our opinion, based on at least my 27 years in this industry, that a 30-year fix is the way to go for most first-time home buyers. And then FHA does accept most of the down payment assistance programs and grants. By the way, if you hear us say Cam is our backbone. Cam is the one who's Cameron is moving our slides ahead. So it's not that you're on Cam, he's doing the work behind the scenes for us. Conventional loan. Conventional loan is the homebuyer's loan that it's not offered or secured by a government entity. Forget about all that. Conventional loans are between 3 and 20% down. It's really for somebody who's got perfect credit, who's got makes plenty of money and has what's known as a low debt to income ratio. Debt to income ratio is the amount of money that you make versus what goes out on a monthly basis. And when we say what goes out, we're talking about things that are on your credit report. So we're not worried about utility bills. We're not worried about your Netflix bill. We're not worried about bills like that. We're talking about specifically things that are on your credit report. Cam, let's go to FHA versus conventional. Typical FHA loan is 3.5% as a down payment. Conventional, the average conventional loan. So last year we helped a little over 600 people as a company, and we've got a small company. We helped a little over 600 people get into conventional loans. The average down payment was around 5%. The minimum credit score for FHA is a 550. Minimum for conventionals is 620. We look at the debt ratio, the amount of money that's coming in versus the amount of money that's going off. And we always go off your gross income, not after taxes, not after you're putting money away for retirement. So you may qualify for more than what you think you can. And the loan limits are here, 420,000 for FHA and conventional 647. Most of our first-time homebuyers are buying properties that are in the 250 to 350 range as a purchase price. All right. Oh, he's back.
Sorry, guys, a little technical difficulties. All right, so what you can and can't use for down payment and closing costs. Okay, so these are the funds that you would be allowed to use, that the underwriter would allow for the loan, as far as your down payment or your closing costs. So a 401k or your retirement accounts, you can pull money out of those. Those would be allowed. Gifts, so you can get gifts from family or even friends, depending on your situation, or even the seller themselves. So you can get gifted the funds. Checking and savings, so any money that you have that is in your checking or savings accounts, that will qualify for the down payment or the closing costs. The one thing is it just has to be sourced in season. So they just have to know where it's coming from, just for them preventing things like, money laundering, etc. Stocks and bonds, you can use those. Credit cards, however, so a credit card would be adding a new debt to your expense, so you're really not going to be able to use a credit card for like a down payment on your mortgage. It's not going to be allowed. Loans, so personal loans or even private loans, not so much. If it's like a home equity line that's attached to a property and they're using it for a down payment, that can be allowed. But if you have a particular scenario with a loan, you would definitely want to go with your broker directly. Undocumented cash. So if you got a bunch of money under your mattress or in a safe, unfortunately, it is not sourced or seasoned, so you cannot use that. And for all of the cryptocurrencies out there, as of right now, they're still pretty much not usable. There's a couple of exceptions to that, but for the most part, not there yet.
Kyle, can I chime in real quick? I know this is way off script, but one of the things that we didn't cover in our PowerPoint that we should have for our first-time home buyers is if you're a veteran, and Kyle's a veteran, if you're a veteran, you may not need a lot of money as a down payment anyway. VA loans, most VA loans are 100% financing, and we didn't talk about USDA, but USDA is 100% financing as well. So if you don't have any money to put down, but you say, oh, well, I have a DD 214 and it says I'm eligible for a VA loan, then we can go onto the VA portal and we can pull and see if you're eligible, go from there. And then for USDA, if you're willing to move into a USDA, I know it sounds funny, like you're buying USDA like a steak, but USDA is rural housing. And if your income is low enough and you're buying in an area that's within the USDA map, you can get 100% financing plus and move into the house of your dreams. And with people working out of their homes these days, a lot of our clients are willing to move further north, north of Hillsborough, northern Pasco, further down to Bradenton, and there are still USDA areas where they can get 100% financing. Sorry to chime in, but
No.
I just realized that we should probably add that for the next group.
Yeah, and if there's anybody on the call that served, first off, thank you for your service. And I'm a Marine. I'm be the first one to tell you that a VA loan is the one great thing that the government did for veterans. If you qualify, it's hands down, it's the best option out there. It's not even close. All right, next, what underwriter looks for to qualify? Well, first, let me tell you what an underwriter is. So the underwriter is the one who is literally writing your loan. So they're going through their guidelines and qualifications for their loan, and they're examining all of the documents that you provided them to ensure that you qualify for this loan. Those are going to be things like taxes, pay stubs, etc. So what they are going to use is, number one, is income. So like I said, pay stubs, tax returns, that's how they consider your income. Assets. So this is any assets that you have, any other properties that you may own, any other retirement accounts, or just accounts in general that are holding funds for anything. Credit. So credit is going to be your credit score, of course. That's a big one. Not only that, your credit history. So your credit report is going to tell the underwriter your score, which is how the bureaus are grading you. And it's also going to show them all of your payment history. So if anything was late in the past, it's going to pop up. They're going to know. This is how they grade you. They're grading you in order to know what their risk is involved in this loan. And then the last one is easy, collateral. So collateral is what you're putting up for this loan, and the home itself is the collateral. So they're going to double check the appraisal and make sure that that all adds up and meets their ratios. Next slide. All right, questions and answers. So this is a good point for anybody to be able to chime in. I'm going to click on this chat here and see what questions we have.
And Cam, could you throw up the booking link? If you've always been curious about buying a house and you're just not sure, schedule a 10-minute, 15-minute conversation. We don't even need to pull your credit report. We just go ahead and just have a quick conversation about what your hopes and dreams are, and then we'll figure out if there's hope. You'd be surprised at how many people think that their credit score is too low, or they think that they don't make enough money, or they just get discouraged. And it's something that they can easily get fixed. We do a lot of work with self-employed individuals. If you're self-employed, you'd be surprised. There's an income calculation, we figure it out. And if you don't qualify through traditional means, then worst case scenario, we use 12 months worth of personal or business bank statements. Or even yet, believe it or not, there are stated income, or there are no income loans that are out there, with 20% down, and that can be a gift. You can get 80% finance, so 20% down, without having an income or a job listed on the application. So if you're self-employed, newly self-employed, and you're like, yeah, there's no way I'm buying a house, but you pat yourself on the back for coming to our class tonight, because there may just be a chance that we can help you become a homeowner, and you may not even know it. Nathaniel, thanks for being here.
Anybody else have any questions? If you guys have any questions at all, you can throw them in the chat right now. It's a perfect opportunity for us to be able to answer anything specific so far. So the budget for a house. So the way that you would decide is, first off, we're going to pre-approve you, and part of that process is going through your documents to make sure that what your ratios are, and then we will be able to project an estimate of what your monthly payments and costs, et cetera, for this loan would be, and then we would tell you whether or not you're qualified for this loan. And then, so technically it would be it would qualify. Now, whether or not it's in your personal budget, you may decide something else, but we're able to break it down for you.
One thing to add on. So a mentor of mine years and years and years ago, he said, if you look at it from a biblical standpoint, like there's stuff in the Bible regarding it, you really don't want to go over X. We don't work for, and not to take any of Eric's thunder away later on, but we don't work for the builder. We don't work for your realtor. We work for you. And if we see that you're getting in over your head, we do have a financial responsibility to let you know, and we do let you know. We're a family-run company, And if you go to all of our reviews, we've got tons and tons of 5-star reviews, and we want to make sure that we're doing the right thing by everybody.
Great. There's a couple very specific questions here. I'm going to respond to the chat directly, guys, just so that we'll keep the process moving. Cam, you want to go to the next slide?
All right. So mistake number 2, not getting a pre-approval. Cam, go ahead. So when you're looking at getting your pre-approval, there's things that make up that pre-approval. There's pillars of a mortgage approval. You've got credit, you've got your income, you've got your down payment. Those are the main things you want to look at for your pre-approval. Go ahead, Cam. All right. So loan pre-approval. Pre-approval helps you determine how much you can afford to spend on a home, and these are the 3 factors. So we always look at your credit, your income, and your assets. Pre-approval can help you determine what the loan amount you qualify for. It will increase your bargaining power when negotiating with a seller, provide the seller you are using a reputable local mortgage company. So it's going to give you more, just more confidence going into the purchase. Estimate your monthly payment and total funds needed to close. So we'll be able to look at everything during your pre-approval process and know exactly where your payment's going to be and how much you're going to need to get to closing. Go ahead, Ken. Tips for a simple loan approval. So call us, text us anytime if you have any questions through the process. We are available pretty much anytime. Continue living at your current residence. So no big transitions during this time. You want to continue paying your mortgage or rent on time. So no late payments, continue things as normal. Your credit, continue using your credit as normal. So no major purchases with your credit card. Keep things status quo. Keep working at your current employer. So no change of employment. As much as sometimes we want to change jobs, you need to continue, before the purchase, staying with that employer. Keep your same insurance company. So no big changes with insurance as well. Stay current on all existing accounts. So no changing of accounts, no be late on any accounts. Expect requests for additional documentation through the process. Okay, so you may be asked for additional paperwork as you move through the approval process, and just try to provide that for everybody putting together your file. So don't make any large purchases. Don't buy any BMWs or any Mercedes, anything like that. Any car purchases. Change bank accounts, or let me see if I can see this, or cash deposits. Transfer of balances. So you might have some balances. Just keep things where they are. You don't want to close any credit card accounts. So keep things as they are. Don't close any accounts because that can hurt your credit score. Consolidate your debt onto one credit card. So debt consolidation as well is something you want to avoid. Apply for new credit at the time of, or co-sign with anybody. Definitely don't want to co-sign with anybody during that process, or max out or overcharge your credit cards. Try to avoid doing that. All right, pre-approvals and rate locks. So when you are pre-approved, you are verified. We've reviewed your income, reviewed your credit. We reviewed your down payment source. Everything is reliable. We can package it all up into your file, and we can tell you the maximum qualifying amount. And it'll give you a really good picture of where to shop, what you can afford. See if I can move this. Rate locks. Okay, so locks on interest in an interest rate, the current lender in regards to that particular day. So whatever that rate's going to be, we won't know until we're ready to make that purchase and get you locked in while you're shopping. If rates dip early on in the loan process, we can, as mortgage brokers, switch you over to a new lender to take advantage of the lower rate.
Hey, Ryan, can I chime in real quick?
Yep.
Sorry, I'm bugging everybody, but I do want to go over a couple things. There were a few questions, and we're getting a little bit behind on the questions. I just want to give a few answers real quick, so people are being attended to. Davina asked, to qualify for a loan of $300,000, how much does your monthly income need to be? So that's where we have a consultation with you, and we figure out how much your income is. And also get an idea of where you want to buy. So if you tell me that you want to buy in an area like Wesley Chapel where there's a CDD and you've got to worry about your taxes being really expensive, your property taxes being really expensive, or let's say you want to buy a property near the water and you're going to need flood insurance, we need to have that narrowing of where do you want to buy, and then figure out how much you're going to get qualified for. It's a broad question, and we can get that answer for you. I would suggest going to our link and requesting a quick consultation. We'll go through some of the numbers with you. We can do it over the phone. We can do it over the phone. We can do it in person. We can do it on Zoom. Whatever you guys want to do. What if you are on Social Security income and have a part-time job that just started? So part-time income generally is listed at the way it's calculated is you do an average of the last 2 years. So the Social Security income, we would take a look at that, see how much can we use, can we gross that number up? The part-time income probably wouldn't be able to use that initially, but then we would take a look and see, are there other opportunities out there of getting financing with maybe a bigger down payment, something like that. So again, case by case, but if the Social Security is, average Social Security income of, if it's $1,200 and you're trying to buy a house with a payment of $600 per month, then yeah, that might be a possibility. Let's see, what steps do I need to take if I'm already renting and decide to buy a home? Get on our calendar, schedule a meeting, whether again by phone or by in person or Zoom. If a person gets income in the USA, I have experience with this. So if a person, nearing a Sven, if a person gets income in the USA and the other part of the income is from another country, do you know how it will work? So I've done plenty of loans where somebody has a pension from another country, which they're not taxed on here in the US. It's not on their personal tax returns. So we would be able to use that income. It gets calculated just a little bit differently, but it's something that we could use. Let's see, what else do we have? How do we grants to assist with down payment? What's the credit score needed for a VA loan? Deborah, that's a great question. A VA loan, and you should contact Kyle directly with this question. See if you can book an appointment with him as a fellow veteran. VA loan is 100% financing. So if you're already getting 100% financing, you may not need any money out of your pocket at all anyway. The grant money typically comes with a caveat of a higher rate or terms that are more difficult to get qualified for. So let's see, go back. I started a new job in March, making more money. How can I work around that? Well, it doesn't sound like a bad thing, Marshall. That sounds like a good thing. Like you're making more money. It depends on whether or not you're W-2 or your commission. Book an appointment and we'll figure out how to make things work. Is there a way around the 420 loan limit? I'm finding it difficult to find a home for my liking within this price range in this area. So that's for FHA. Yeah, I mean, it sounds like we could take a look at your credit, see if we're able to improve your credit score. If that's what you're looking at, is the reason you're looking for an FHA loan versus a conventional loan. How long does it take for the loans to go through? Also, since I'm self-employed, how much do I have to put down? So it depends if you qualify. If you qualify for an FHA or conventional loan or VA loan, we can get a loan closed in 10 to 15 days if needed. 100%. The only thing that we're up against is is an appraisal. So the appraisal is done individually by the lender that we're doing the loan with, and book an appointment, and we'll go over it with you. But we can get, that's the advantage. That's my part of this presentation when we talk about the difference between a broker and a bank. I've been both in my career. I've been a banker and a broker, and I can tell you the reason I left the banking side is it took a lot longer to get a loan closed. We can close a loan quickly. That's okay. Moesha, we can absolutely help you buy the house you're renting. What's the credit score to purchase with you and your spouse? We're always going to go off the lower of the credit scores, big A, between both borrowers, between the primary and the secondary borrower. And if you have an FHA loan, then you can get away with as little as 550 credit score. And if it's conventional, it's 620. And we do have the tools to help you raise your credit score. So if your credit score is a little bit lower, we've got the tools and we can show you how to do it. It's not for Tampa city limits only. Our office, we have offices, we have couple offices, but our main office is in Wesley Chapel. Drumia, we can absolutely help you with USDA, and I'm taking up a lot of time for the next person who's going to be speaking. So I am going to stop for now, and I'm going to be done with my rambling. And Ryan, you go for it.
Hey, Sam, I was just going to jump in and interrupt for 1 second. So guys, all these questions that you're asking are really good. And you can tell by our answers that there's a lot of options. You know, for whatever reason, most people want to accept that for whatever, they got told no once, or they don't think they qualify, even though they don't know anything about buying a house for whatever reason. Literally, it's a 15-minute phone call conversation with us to get you on the right track. We are not one of those typical mortgage brokers where you call in and you're asking questions and like, oh no, sorry, you don't qualify, and they hang up on you and you never hear from them again. The worst case scenario is from us is you're going to get a plan on what it is that you would need to do to get things ready to purchase that home. So it's worth the 15 minutes out of your day to call and to start that process.
Like Geico, but not.
All right, sorry, Ryan, keep going. We stole your spot.
No, that's all good. Cam, go ahead. Next slide. Oh, who's up next?
Oh, I am. All right. Like I didn't talk enough just then. All right. Banker versus broker. That's your mistake number 3. So you'd be surprised on how many local bankers and credit union mortgage bankers contact me to do their mortgage loan. So a mistake would be relying on a bank or credit union. If any of you have bought a home in the past, so let's say you're now a first-time home buyer, but years ago you applied with a bank or credit union. Have you ever made an application to anything in the past, and then you just kind of sit back and you're like, man, I hope I get approved. I hope I get approved. I hope I get approved. And you don't know for a week or two. It doesn't work with us. Most banks and credit unions, you fill out an online application, and then you send in all your documents. You send in a pay stub and a bank statement and a blood sample and a urinalysis and your right arm and your left pinky, and you don't know at the end of the day if you're still going to get approved. That's the benefit of working with a true professional, someone who knows what they're doing, someone who's been trained. We're not glorified tellers. We do one thing and we do one thing really well. We close mortgage loans. We provide world-class service. We're on the phone right now at 7:30 in the evening. We appreciate everyone being on, and we answer your calls. When it comes to getting your contracts accepted, that's really the beautiful thing about somebody like me or Ryan or Kyle or Eric. The beautiful thing about us is we want to help you get into that house. We want to help you get that contract accepted. We only get paid if your loan closes. So we contact your listing agent when you put an offer in, introduce ourselves. We've got a spotless reputation in this area, and we're talking about thousands of transactions, and all 5-star reviews. We contacted the listing agent. We let them know we've reviewed your income, we've reviewed your assets, we have an approval through either Fannie Mae or Freddie Mac system, we've reviewed your budget, you feel comfortable with the home, we can close this loan in X amount of time. You never know the seller's position. The seller's position could be, I need to close in 15 days, or I want to move out in 45. You never know what that seller's position is. What they're looking for is flexibility, and they're looking for certainty. That's what they want. They want certainty. So your seller, when you make an offer on a property through your realtor, the seller wants to know what are the percentages? What are the chances that this person's going to be able to close? That's what they want. They want certainty, just like anything else. In life, there's not a lot of certainty. We can provide some certainty. Large banks typically do have tighter guidelines, and they're going to try to fit you into this box. This is the box that they have. We're signed up with 47 different wholesale lending relationships, meaning that we can get you the exact same loan that your bank or credit union can get you, plus that and more and more. You guys can't see my hands going all the way out, but we've got so many more options than the typical bank or credit union, and we know how to pivot. So when you come to us and you say, you know what, I'm self-employed and I don't know if I'm going to qualify or not. So what if we take a look at your tax returns, we plug in some numbers, we see whether or not you're going to qualify, and worst case scenario, you don't qualify through traditional means. So maybe you wrote off a whole bunch of money on your tax returns, and you don't qualify through traditional means. We've got backups. We can possibly use bank statements for proving out your income, or we can do a no income loan for you as well. Large banks don't know how to pivot. Cam? So ideally, the smoothest process, so the easiest way, again, My Easy Mortgage, the easiest way is you want to speak to a mortgage broker as early as possible. If you've got a 659 credit score and we can help you get up to a 660. So if you want to be proactive, the best thing you can do now is go onto our booking link, schedule an appointment with one of our licensed and experienced loan officers to help you with your budget, see if you can get qualified, and maybe your credit score is a 619. We have the systems to run the algorithm to see if we can get you over that 620. It's a free consultation, and there's zero obligation. In worst case scenario, we tell you no or a not, but our no's aren't no's, our no's are not yet. Which means that working with a mortgage broker can save you time and fees. The last thing you want to do, and I've been doing this for 27 years, the last thing you want to do is drive around with a realtor who does not have a pre-approval letter. That just means that they're a horrible realtor. You want to fire them immediately. Get a realtor that wants a pre-approval letter. They want to make sure that when you bring your spouse and your kids into that house, and your kids are picking out their rooms, and your spouse gives you the thumbs up and you agree on something, the last thing you want to do is then find out you've got that euphoric state. The last thing you want to do is then find out, oh, we don't qualify. Like there's no reason for that. You want to be able to make sure that you can absolutely you can provide certainty to the seller. You want to be able to provide certainty to your family. I don't know if you guys saw the memes that we put up earlier, but we want to help you get out of the rent race. You know, there's a rat race and there's a rent race. We want to help you get out of the rent race so that you don't have to work. There we go. Yeah, Cam, what's another good one?
Oh, that's a huge one. While you're paying rent, is a big one.
So So mortgage brokers will do a lot more than recommend a mortgage. We provide you with a blueprint to home ownership and building generational wealth. Let's buy this house, never sell it, pay it off, rent it out. There's no reason not to. So, all right, what do we got next?
That'd be me. How you doing, everybody? Eric here. I'm going to talk to you a little bit about buying directly from a builder. This is something that's I have a lot of experience with. I did see, I think Sam mentioned it earlier, I did see another comment there that asks how much it costs for a consultation. It doesn't cost anything, guys. Talk to us for 15 minutes. You know, we don't charge you, and we don't pay to run your credit. We don't pay for anything like that. So please look at the link, give us a call. 15 minutes is what it takes. So you want to talk about a builder, right? This is something that that I have a lot of experience with. I'm actually one of the salespeople that works for a local builder. We're doing his loan on his house right now because, you know, it just made sense for him to do that, right? Instead of going with his preferred lender. You know, the builders, realtors, they work for the builder, not for you, right? That's why it's important. Their job is to have you sign on the dotted line, and they will do whatever it takes to keep you locked into that contract. That's on the builder side. So you need to have representation, right? You need to bring your own representation. It couldn't be more important, right? All right. Cam. So the closing cost assistance can be a little tricky when you get to that, and they will come with the higher interest rate, right? And which costs you more in the long run. Think about that. If you're going to be getting a couple $1,000s in the down payment assistance with them, but they're giving you, say, a half a point higher in the rate, how much is that going to cost you over a 30-year run? You know, that's where we do the math for you. We can compare and contrast and see what's best for you. You need to have an independent realtor that works for you, right? And that's so important. They'll work with the sales agent, you know, that works for the builder. They can help you make the best decisions, you know, financially as you build. A realtor is also knowledgeable about what to look for during the inspections and the final walkthroughs. Now, I think, you know, I speak from experience on this because we bought a new construction in 2018, and it's the reason that I got into this business, really, because we just did not have a good experience with that. They gave me an elevated interest rate that I had to refinance right after we closed, right, which cost more money. So most builders will be straight with you, and they don't care, and they shouldn't care, you know, who your lender is, right? And that should be like a red flag for you, right? If you go into a builder and they only want to push you to their preferred lender, there should be alarm bells going off. They shouldn't care if you go to shop around to get you the best rate as a consumer. All right, Cam. Yeah, good. All right, guys. We'll talk to you soon.
Good evening,
All right.
everybody. You got this, Kyle?
Fire when ready. Go ahead. You got it, brother.
This is the home inspection. You go right ahead, man. I've got the condo.
Got it. So cost of skipping a home inspection, guys. Why are home inspections so important? So a little bit earlier, like we discussed, so your home inspection is a lot like if you're buying a used car to get that Carfax. So it's going to tell you anything that's currently wrong with it. You know, when you're buying a $200,000, $300,000 or $400,000 home, you want to make sure that you at least know if there is anything wrong with it. Cost versus savings. So $360 versus the cost of the entire home. So $360 is about the average cost of your normal home inspection. And if the average cost of your home is $400,000, you would much rather spend $360 to know what's wrong with it than to find out the hard way. Next slide, Cam.
Kyle, can I touch on that real quick?
Fire in.
All right, so the worst thing you can do is not get a home inspection, not for the little stuff. Like you expect as a homeowner that if you have to replace a toilet one day, you're going to have to replace a toilet. It costs you, what's a toilet cost these days? Chuck, you're in real estate, $150. Okay, so it's not the end of the world. The reason you get a home inspection is for the big stuff. You get a home inspection because the foundation. You want to make sure there's no cracks in the foundation. You want to make sure that there's no evidence of a potential sinkhole. You want to make sure that I don't know what are other good roofs?
Mold, AC units, roofs. There's all
Roofs,
kinds of things that those inspectors are looking for. You don't want to go in and have there be a wall full of mold.
And you want to do it through a licensed and insured contractor or inspector. You don't want, I'm sure that everybody here has like an Uncle Bob, right? So you don't want your Uncle Bob to go on the roof and then tell you whether or not he sees any cracks, or if because he did construction 22 years ago. Get somebody who knows the guidelines now to know how much life does your roof still have. And get somebody independent. We'll probably recommend a couple people. Your realtor recommend a couple people. Interview them and make sure that it's like it's really important. Don't skip out on it. It's really important to have it done to make sure that this huge financial decision is the right one based on this particular property. So as I tell my clients, if you're going to put a ring on it, make sure that everybody's healthy.
Yeah, the $360 is nothing compared to what it can discover. Something as simple as just knowing that the roof only has 2 years left of life is a huge thing. That could cost you, between $8,000 and $15,000 for needing a new roof in the next year.
And a good realtor may be able to negotiate some help on that in the home buying process, where maybe the seller's picking up the new roof, or you never know. You never know what the market's going to say.
All right, so this is the home inspection, but this is for a condo.
All right, good evening, everybody. As I mentioned in my intro, for those of you that weren't on the call yet, my name's Charles Roundtree. I'm the broker and owner of Insta Real Estate Solutions here in Tampa. And just let me ask, can everybody hear me okay? Can you hear me, Sam?
Yes, sir. Yes, sir.
Okay. I
We
just
can hear you.
wanted to make sure that the audio was working. Just wanted to make sure the audio was working on my end. Thank you. We're proud to be a partner of My Easy Mortgage, and would be happy to help any of your real estate. I'll make a quick shameless plug, and I'll jump to the heart of it. You can visit us online at www.instarealestatesolutions.com. We service the greater Tampa Bay area. The condo document review, this is a very high level topic, but I want to bring it into common practice and put this in your mind, not to alarm you, but to give you the information you need to equip you moving forward in your home search. I've seen a lot of comments here in the text thread that are speaking to affordability. As the price of homes are continuing to increase, it becomes harder and harder to find homes that are within your budget. And typically speaking, condominiums are priced lower than single family homes. And so what happens as a result of that is you embark upon your home search, the mindset starts to shift, and you may realize that the single family home is not in your budget, but condominiums are. And if that's the case, there's some things that you just need to be aware of so that you can go in to that search with your eyes wide open. Condominiums are associations. And what that means is that they have restrictions. You may or may not have heard the term homeowners association. Well, condominiums are the same way in effect, meaning that they have a governing body. And that governing body has bylaws that details the restrictions associated within that condominium community. Those bylaws can be anything from whether or not you're allowed to have pets. If it's a 55 plus community, that means that you couldn't live there or you couldn't have children there. So there are restrictions that you will absolutely want to be aware of. So therefore you cannot afford to look at these condominium documents during what's called your inspection period or your due diligence period. And that's when you're doing your homework once you're under contract with your real estate agent to help you make a well-informed decision of whether or not this is the building that or the community that you want to live within. When you think in terms of whether or not the condominium association is healthy, so what does that mean? That's speaking specifically to their financial solvency. So if you think of a building that has, let's just say, arbitrarily, it's got 200 condominiums located within this building. So there's 200 units in this community. Each one of those homeowners has a monthly fee that they pay. It's an association fee. And oftentimes in a condominium, that fee is going to include things like water. Sometimes it will include electric. Sometimes it will also include your cable bill as well. So as these fees are collected, the association is taking that money and using it to pay the general operating expenses of the building. Well, in addition to the general operating expenses, you have other items that are just considered reserve line items. So you think about the life expectancy of the roof of that building, the life expectancy of the exterior paint of that building. Things that as a condominium owner, you don't have to worry about like you would in a single family home. You know, if your roof needs to be replaced on a single family home, that is 100% your responsibility. And when that time comes for replacement, you're going to pay for it out of your own pocket. In a condominium, it's the association who's paying for it. And it's a collective funding source, meaning that you and all of your neighbors that own within that building have paid throughout the years. So when the time comes, that roof will get replaced or that paint will get replaced on the exterior. Common areas in the building will get updated. So in the course of your review, you and your agent, your realtor that is, would be looking at the general operating budget as well as the reserves to make sure that that association is well funded and that their finances are in order so that you don't step into the proverbial landmine whereby you purchase only to find out they weren't well funded and you step into rising monthly expenses where your association fees are going up exponentially. So that's a very critical component that you do not want to gloss over or omit during your due diligence period. Another important question that'll be answered during that review, it's called an estoppel. The lender most times is going to require it, and they want to know what is the percentage of owner occupants versus the percentage of renters in that building. They have parameters and guidelines, they being the lenders, and they want to know the percentage of owner occupancy. And depending upon the answer to that question, they may or may not be willing to give you a loan on that particular purchase if the building has too many renters in it. They prefer to have more owner occupants than they do renters in a community that is a condominium specifically. When you think about sections of bylaws that you should be concerned about, so these are can get tricky again, but with a well-informed and knowledgeable real estate agent, they'll be able to navigate you through this. So I mentioned one of them in the beginning, and that's whether or not you can rent this property out. So let's say that you're in a position where income is such, or the market is driving you in the direction of a condominium purchase because it's a lower dollar amount than what the single family home would be, and it fits your budget. But you outgrow that. Let's say 3, 4, 5 years from now, you're making more money. The market has shifted and your family is larger and you need to move out of a condominium and into a single family home. And you want to rent that unit out as opposed to selling it and turn it into your first investment property. You want to know whether or not that association is going to allow you to rent the property out. Some communities have restrictions on whether they'll allow that or not. If you're a pet lover, depending upon the breed of your pet, depending upon the size of your pet, they may or may not allow it. So these are just important questions. Those are two very simple ones. There are a lot of others that I won't bore you with tonight, but these are just some simple, tips and tricks that you want to know about going into a condominium purchase, so that you don't, make the mistake of spending money on an inspection, spending money on an appraisal, only to get to the finish line and realize that there are some things that had you known them prior, you might not have made the decision to move forward. So again, this isn't to scare you. The condominiums are a great form of housing, and they're very affordable in most cases. But in going into that purchase, you just want to make absolute certain that you know what you're getting into, and you go in eyes wide open. And with that, I'll conclude my portion here. I'll end with a simple but true statement that the mind obviously can only absorb what the seat can endure, and I've kept you sitting long enough. So I'll turn it over to our next speaker.
All right. All right, guys. So how do you feel now? So what we're hoping for is we're hoping that you're excited. I mean, if you're not excited to buy your first house or to start to grow your own equity, your own wealth, and your own family way of giving to your kids, when you guys go pass on the home, you should be. At this point, hopefully you're getting a little bit excited, confident in the fact that hopefully you've learned a little bit. There's a lot more to learn. You can't learn everything in a 30 or 45 minute class. Realistically, it takes years and years to learn, but that's why you're using us as experts, so that we can pass the knowledge that we have on to you. Informed. I hope at this point you've been thoroughly informed. There's a lot of really good questions on the chat right now, guys. I'm going to answer some back to you specifically, but realistically, the easiest way for you to get informed is to click that link and schedule that 15-minute free consultation. There's a couple of questions in here asking about our fees, our costs, etc. Our costs to you are free, is zero. We get paid by the lender. We don't charge you for an application fee. There's no charge for pulling your credit report, for none of that. So it's legitimately a 15 to 20-minute phone call to figure out exactly what it is that you guys can qualify for, or what you don't qualify for, but what you need to do to improve to get there. Next slide, Cam. All right, so there's our link again. This is a great time for anybody to ask any questions in the chat. We'll stick around and answer any of these questions, but the fastest way for us to get your answers realistically is for you to just click that link, pick a 15-minute window that works best for you, and then ask your questions. It's nothing but time. If you can give us 15 to 20 minutes, we can give you the path to getting into your first home.
And any of the obstacles that you might have thought that you have potentially may not even be there.
A couple of questions about people with back taxes and things like that. There's ways around that. As long as you have an extension, or if you made a payment plan or something like that, that's not a deal killer by any means.
New construction houses are included. Eric went over a little bit about that. Eric bought a home, new construction, and how long ago? 3 years ago?
Yeah, I bought it in 2018, and I mean, we had really good credit. We didn't know much about the whole process, and they hit me with a 5.5% interest rate when everybody else was getting 3.5%. And it was kind of a bad experience for us, but I didn't have the knowledge to call somebody else and bounce it off somebody else, at least to have a look at it. And that's the thing, when you guys go and you talk to a builder, they're going to give you a loan estimate, right? Because they're going to have you talk to their preferred lender or whatnot. Let us see it. Let us talk to it. We're going to be honest with you. Like Sam said at the beginning of the call, we're a fiduciary for you. We work for you, right? And we're only going to do what's best for you guys. If it's a good deal, man, great, take it. You know, or if we could do better, give us that opportunity. That's all we ask.
Latrice, you live in Maryland and plan to move to Florida in 3 years. Depends. If you wanted to buy a second home, you could actually buy a second home here in Florida. Second home down payment is only 10%. So 10% down will buy you a second home. If you wanted to buy an investment property, we're quite good at that as well. Down payment on that is typically about 20%. But and both of those, we do plenty of those. The majority of the loans that we do are conventional and VA. Those are majority of what we do. But when they don't fit in one of those two scenarios, we pivot out and we look at FHA. We look at what are known as non-QM loans, which are there's a whole secondary market of loans to help people with home ownership, and we've got all those different products. And we appreciate everybody being on tonight. Thank you so much for taking the time.
All right, guys, thanks again for everybody coming out. And there's our link again, and feel free to get that appointment booked as soon as possible.
Thanks, guys. Have a great evening. Hope to talk to y'all soon.
All right.
Thank you all
Take
so
care,
much.
everybody.
Yep. Take care.